Hello and welcome. Today we're tackling a topic that can be a real head-scratcher for both tenants and landlords, lease premiums in the UK. And to help us make sense of it all, we've got this great guide from the experts over at My Tax Account.
So, let's start with a situation that might sound all too familiar. Imagine this. You found the perfect spot for your new cafe. You're excited, you're ready to go, and then, bam! The landlord drops this term, lease premium. What on earth is that? Let's figure it out.
So, what is a lease premium? Honestly, the best way to think about it is like an entry fee. It's a one-time upfront payment you make to the landlord, not for your monthly rent, but just to get the keys and secure the right to that lease for a set period.
And here's why this really matters. Rent, that's just a regular ongoing expense for using the property. A premium, though, is considered a capital payment, and that one little difference completely changes how HMRC sees it, and believe me, that's where things can get a little bit tricky.
So when it comes to tax, the first question you've got to ask is super simple. Are you the one paying the money, or are you the one receiving it? Because the rules are completely different depending on which side of that deal you're on.
All right, first up, let's look at this from the tenant side of things. You've just forked over a big chunk of cash for this premium. The big question is, can you get any of it back from the tax man?
Okay, so the answer all comes down to one magic number, 50 years. If your lease is what's called a short lease, and that's anything under 50 years, then yes, you can treat that premium as a business expense. You just spread the cost out over the life of the lease. So let's say it's a £20,000 premium on a 10-year lease. You got it. That's a sweet £2,000 you can knock off your profits every single year.
Let's put some real numbers to this. Meet Sarah. She's opening a cafe in Manchester, and she pays a £15,000 premium for a 5-year lease. So how does that help her?
Well, she divides that 15 grand by 5 years, which means she can deduct £3,000 from her profits each year. For a basic rate taxpayer, that puts a real £600 back in her pocket every single year. That's a huge difference.
So if you're a tenant, what's the game plan? It's simple. 1, check your lease agreement. How long is it? 2, figure out if it's a short or long lease. 3, if it's short, do the math and divide the premium by the number of years. And 4, the most important part, make sure you actually put that deduction on your self-assessment tax return. Don't leave that money on the table.
All right, let's flip the coin. We've seen the tenant's side. Now let's step into the landlord's shoes. You've just received this lovely lump sum payment. What does HMRC expect you to do with it?
Well, for landlords with short leases, HMRC looks at that premium and says, that's part capital and part income. A chunk of it gets taxed as if it's rental income right away in that tax year. And yeah, there's a formula for it. It looks a bit intimidating, I know, but the idea behind it is actually pretty straightforward.
Let's not get bogged down in the algebra. We'll use our same example, a £20,000 premium on a 10-year lease.
When you run those numbers through the formula, it basically splits that 20 grand into 2 pots. The first pot is the capital part. In this case, that's £16,000. That gets put aside, and you'll deal with it for capital gains tax later on.
That leaves the other part with £4,000 in it, and that is what HMRC considers property income. Right now, you've got to declare it and pay income tax on it in the year you get it.
Okay, but wait, it's not just about income tax. Whether you're the tenant or the landlord, there are a few other things you really need to be aware of. Some common traps that can be surprisingly expensive if you fall into them.
Yeah, a lease premium can set off a whole domino effect of different taxes. We're talking about not just income tax or capital gains, it could also trigger stamp duty land tax for the tenant. And if the property has been opted to tax, you could even be looking at VAT. It's a lot to keep track of.
And you know, getting this stuff wrong isn't trivial. An unreported premium could land you with penalties up to 70% of the tax you owe. Ouch. But here's the good news. Most of these common mistakes are totally fixable, as long as you catch them.
Phew, okay, that was a lot of information. So let's zoom out. What are the absolute must-know takeaways from all of this?
Okay, let's just quickly recap the big points. Number 1, a premium is not rent. It's an upfront payment. 2, everything hangs on that 50-year rule. That's the key. 3, for short leases, tenants get to deduct the cost over time. 4, landlords, you're going to pay some income tax on a piece of it right away. And finally, number 5, always check for other tax hits like stamp duty or VAT.
Look, the basic ideas are pretty straightforward, but every lease is different, and applying these rules to your specific situation can get complicated pretty fast.
It really shows how complex these property transactions can be.
And that's why, when you're dealing with this kind of complexity, getting advice that's tailored just for you is so important. For that kind of expert guidance, you can get in touch with the team at My Tax Accountant. All their details are right there on the screen. Thanks so much for watching.